Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for the week ending June 17th, 2022. Stocks, yes, it's a little bit ugly continually. The stocks were down once again last week across all major global indices following interest rate hikes by the Federal Reserve, the Bank of England, and the Swiss National Bank due to persistently high inflation rates, which they of course said was going to be transitory. They should have raised rates all along, but here's what it is and this is what happens. So the U.S. benchmark S&P 500 dropped 5.75% last week. The Russell 2000 was down 7.43%, and the NASDAQ fell 4.76%. Now overseas, the international developed markets, which is the EFA, was down 5.73%, while the emerging markets was down 4.65%. And we saw that do not so bad lately, but it's actually come down as well. Let's talk about fixed income. As its June 14th, 15th meeting, the Federal Reserve was widely anticipating to raise interest rates and did so at a 75 basis points, which is 0.75% point pace, and the pace is now 1.5 to 1.75% range in an effort to moderate economic growth, thus reducing the rate of inflation. Additionally, the Fed raised its inflation estimate for the year end to 5.2% from the prior 4.3% forecast, before falling rapidly in 2023. They also lowered their 2022 forecast for economic growth from 2.8% to 1.7%. So let's talk about this real quick. We talk about, unfortunately, people are saying, well, a lot of people who want to say that, oh, we're not going to have a recession, oh, there's no way we're going to have a recession. What do you think this is? This is slowing economic growth. This is higher interest rates. You're going to see the weakening of the economy. We are in a mild recession right now. We're going to be, but we've been there before. We've seen recessions before. We've seen the Great Recession. This is no time to panic. This is the time to stay the course. We can adjust portfolios. We can pull back on some risk, but we want to stay invested. There are some safety precautions that we have built in. A lot of you already have that. But we want to make sure that we've been through this before. Everybody's, oh my gosh, doom and gloom, this is the end of the world. This is not the end of the world. We've seen this. We just have to keep our heads and keep moving along, and if we're properly invested and if we're properly allocated, we're going to be fine. Okay, let's get into commodities. Energy prices fell last week on expectations that heightened interest rates rise and the risk of reduced economic growth, holding down demand for crude oil and other energy sources. So this is the same time that China, why are we talking about China again and COVID lockdowns? Because why do we care what they're doing over there? Well, because it does affect everything, because their demand on crude is less because they're still doing lockdowns, so they're not consuming as much oil. So the price of West Texas crude did fall 9.4% 10 a week at $109.56 per barrel. Economic data, housing starts dropped 14.4% in May, well below expectations, and the lowest over a year. And single-family starts dropped 9.2%, while multifamily, which has been very strong, tumbled 26.8% month over month. Building permits, which also signal future starts, dropped 7%. Again, things are slowing down. Interest rates are well over 5% now. You're going to see slowdown. You're seeing gas prices, interest rates. People are pulling back on the spending. It's just what's going to happen. Let's talk about company news. FedEx, which is a G50 holding, rose 11.9% last week, following a 53% dividend increase and the board's agreement with its activist shareholders to expand the board of directors and enact changes to better align with shareholder interests. We talk about that, our G50 portfolio. Why do we love that? Great dividends in time of uncertainty in the market. We're still getting reoccurring dividends, which really help income during retirement. Let's talk about Lam Research Corp, which is a contrarian holding, fell 11.6% after the semiconductor sector dropped on fears of falling consumer spending for electronics due to rising food and energy prices. Wait a minute. Why are semiconductors dropping when we have chip shortages? That I don't understand, but again, that's what happened. All right, thank you so much for being part of the ARA family. To contact us, call us at 855-756-5700. Visit our website at aradvisorsinc.com. Visit our Facebook and YouTube pages. Scan the QR code if you're not already getting our newsletter, but you most likely are. That's it for this week. God bless you. We'll see you again next week.